Good afternoon and welcome to Matters Financial and Geopolitical from a Frontier. Thank you for stopping by. Let me start with some macro thoughts. The media is hell-bent on scaring people out of the market. That's via Hayek and Keynes. And, this is what I was talking about in my weekend article, that safe havens are priced for Armageddon now. And indeed they are. Currency-wise, the US trade-weighted broad dollar index broke to its highest level since 2001, and Sun Chartist is talking of a cup-and-handle pattern about which he's normally bullish. As I said at the end of last year, the direction of the dollar is therefore pivotal. This is another chart from Liz and Saunders. Broad trade-weighted dollar has taken out its 2002 high. Moving on to the bond market, I've written severally about it. I wrote an article in June calling it a Wizard of Oz world. Guess where the world is headed? NIRP, that's from M. Nicoletos. And this is a table from Forex Live of 10-year bond yields. These are unbelievable prints we are seeing. And that's why in June I said bond yields are in tilt mode. Home thoughts. What matters in life is how you spend your time. That's from movement_cap. CUMMINGS. I carry your heart with me, I carry it in. My heart, I am never without it. Anywhere I go, you go, my dear. And whatever is done by only me is your doing, my darling, I fear. No fate, for you are my fate, my sweet. I want no world, for beautiful you are my world, my true. And it's you are whatever a moon has always meant, and whatever a sun will always sing is you. Here is the deepest secret nobody knows. Here is the root of the root, and the bud of the bud, and the sky of the sky of a tree called life, which grows higher than soul can hope or mind can hide. And this is the wonder that's keeping the stars apart. I carry your heart. I carry it in my heart. This is a photograph by Alias Dar, Mount Kilimanjaro at dusk from the Amboseli. Incredible. 1 in 7 of Earth's 7.5 billion people live less than 10 meters above sea level. By 2050, 1.4 billion will. That's why, as I said in November 2015, I cannot help feeling we are like frogs in boiling water. We have created massive interference in the cosmic tuning phenomenon. Political reflections, quite a quote from President Trump on global threats. Nothing keeps me up at night, he said. Of course, he's been having a toing and froing with the Danish Prime Minister. Trump's idea of buying Greenland is absurd. It's not for sale. And US President Trump's idea of buying the semi-autonomous Danish territory in the Arctic from Denmark is an absurd discussion. Greenland is not Danish. Greenland is Greenlandic. I persistently hope that this is not something that is seriously meant. Retreating ice could uncover potential oil and mineral resources in Greenland, which, if successfully tapped, could dramatically change the island's fortunes. However, no oil has yet been found in Greenlandic waters, and 80% of the island is covered by an ice sheet that is up to 3 kilometers thick, which means exploration is only possible in coastal regions. Thankfully, the time where you buy and sell other countries and populations is over. Let's leave it there. Jokes aside, we will of course love to have an even closer strategic relationship with the United States. Denmark is a very special country with incredible people, but based on Prime Minister Mette Frederiksen's comments that she would have no interest in discussing the purchase of Greenland, I will be postponing our meeting scheduled in 2 weeks for another time. And there is a reason Trump tweets. It gives him Pavlovian control over the narrative, and the question is, what is he trying to decoy from? Iran's economy may shrink 9 to 10% this year, the worst fall since the Iran-Iraq war, as US sanctions cut Iranian oil exports and Trump's trade war suppresses global trade and the oil price. As I said in May, Iran is at the Hunter S. Thompsonian age. There is no honest way to explain it, because the only people who really know where it is are the ones who have gone over. However, I wrote in that article, if the US thinks Tehran will just roll over, which appears to be the case, then they're exhibiting the same deluded ideas that they exhibited a day before the peacock throne got plucked. Trump has been a big proponent of coercive financial and sanction warfare, and its expression vis-à-vis Iran is its apogee. Consortium news, Trump's Persian-Gulf car crash. The coming collision in the Persian Gulf, the equivalent of a 100-vehicle pileup on a fog-bound interstate, has been in the works for years. The situation is explosive for two reasons. First, the Iranian economy is in free fall, with oil exports down as much as 90% from mid-2018 levels. As far as Iran is concerned, this means that it's already at war with the United States and has less and less to lose the longer the US embargo goes on. Second, after Trump denounced the 2015 Iranian nuclear accord, from the moment he began his presidential run, it's all but impossible at this point for him to back down. The result is a classic collision between the immovable and the unstoppable, with no apparent way out. How did the world bring itself to the brink of war? The answer, ironically, is by bidding for peace. Talking about the Obama-Hassan Rouhani peace deal, and how Saudi Arabia felt very differently. And in response to that, the upshot was a proxy war in which the Saudis set out to roll back Iranian power by striking out at pro-Iranian forces. The offensive began after a new Saudi monarch ascended the throne in January 2015. King Salman, a doddering 79-year-old reportedly suffering from Alzheimer's, immediately handed over the reins to his favourite son, 29-year-old Mohammed bin Salman, whom he named Deputy Crown Prince and Minister of Defence. MBS celebrated by launching an air war in neighbouring Yemen 2 months later, and then disappearing on a week-long vacation in the Maldives, funneling hundreds of US-made towers to Syrian rebels under al-Nusra. For the Saudis, it was a neo-medieval crusade whose goal was to topple two religio-political allies of Iran, the Alawite-dominated government in Damascus and Yemen's Houthis. The upshot has been Saudi wars claiming hundreds of thousands of lives in Syria and another 100,000 or so in Yemen. And then saying, Trump, when he announced his presidential bid, take a look at the deal he's making with Iran, he makes that deal, Israel maybe won't exist very long. Trumpian isolationism, which is very popular amongst a lot of people, was fleeting if it ever existed at all, which is my question. And basically saying, the upshot of all this, consequences are unpredictable, US firepower is overwhelming, Iran is not without resources of its own, among them anti-ship ballistic missiles, mobile short-range rockets that can hit naval targets. They've been very bold, I've got to admit. Upshot could be a war drawing in half a dozen countries or more. A confrontation on that scale may seem inconceivable, but then war seemed inconceivable in the wake of Archduke Franz Ferdinand's assassination in June 2015, in June 1914. Wow. I wrote about that peace treaty on the 28th of October in an article I called Barack Obama and Hassan Rouhani, the two Husseins. And in that I said if the Pax Americana in the Middle East were a three-legged stool with the US the most important leg, Israel and Saudi Arabia, I said, are the other two legs of that stool. At that time, I said, neither Riyadh nor Tel Aviv are aligned with President Obama's Iranian rapprochement, and Saudi Arabia in particular has become increasingly forthright and is even threatening its own pivot away from the United States. 13th of November 2017, writing about the 30-year-old Crown Prince of Saudi Arabia, MBS, I said he arrived on the scene and immediately launched an unwinnable war in the Yemen. He is, of course, the alleged owner of Leonardo da Vinci's Salvator Mundi, which is a painting of Christ as Salvatore Mundi, savior of the world. President Kagame, in a state visit to Namibia, said, it's as if Africans can't do fine, they must be doing things that must be validated by others somewhere. We don't need any validation, we want to do things that benefit us, that put us in a place where we want to be, he said, listen to it. Pitaji is back, this is the wing commander with the mustache. Financial Times says Hong Kong is now the biggest wild card. And in my article over the weekend, I said Hong Kong is presenting a serious challenge to the Chinese authorities. Okay, let's go back to sterling, about which I wrote on the 5th of August, and we've had plenty happen thereafter. Then I said, as I watched the pound fall like a stone, I could not help wondering if this sterling moment is precisely like that it was in 1992, a no-brainer. Bloomberg had an article, the pound may revisit 2016 lows as chart signals turn more bearish. We're currently at 121, just shy of 50. UK currency formed a bearish candle pattern on Friday, the so-called downside Tasuki gap, which signals the continuation of the current downtrend. Let's see. And basically saying that, we dropped to as low as 120.83, then some Merkel comments came and we got a quick sharp push higher. And we're sitting up there at the moment. Boris is bluffing every action, every appointment, every word. Since he entered number 10 signals the same thing. Britain is leaving the EU on October 31st. I like this from Julia McFarlane. Fair chance the UK will still be arguing about Brexit when all of humanity is living underwater and breathing through oxygen tanks, scavenging for sea cucumbers. Back to my article on the 5th of August, the key question is this: can Prime Minister Johnson self-eject Britain? Can he be stopped? This is a political calculation. Paul Mason, Boris's letter to the EU is a wind-up. It unilaterally reneges on a joint report signed by UK negotiators in December 2017, saying the UK would align with the single market in the absence of agreed solutions. He has no mandate for this. But go back to my question. Can he self-eject? I think he can, actually. All signs point to an inflection point for the markets. This is John Alther's Very interesting article, worth reading in full. He's got a lot of important points. Stocks remain very weak relative to bonds, holding at levels from which they had at previous points in the post-crisis equity bull market enjoyed a strong recovery. If they don't snap back quickly, then it might start to look like the beginning of a major secular move with stocks falling. I don't think the markets will agree with that until substantial pain is inflicted first on those who bought bonds and sold stocks this August. Some kind of sentiment reversal is due. Should that now play out, new all-time nominal highs in the major US indices would not be at all surprising. And I tend to see the dollar going higher. I wrote about that at the end of December. I said the direction of the dollar is therefore pivotal. And I think bond yields are an elastic band that's been very, very stretched. And I think you're going to get a snapback at some point. I don't know what will be the catalyst for it. But clearly we can't stretch much further than here. Let's turn to the currency markets. Euro dollar popped over 111, back below it, 110.95. Dollar index very firm, 98.225. Japanese yen, 106.54. This is a key currency to watch, but obviously not as key as the renminbi. Swiss franc 0.9796. The pound 121.46. Keeps coming. It's been in this 121.80 top side, 120.53 bottom range of late. Australian dollar 0.6784, India rupee 71.5432, South Korean won 1201.90, the real 405.32. That popped over 4 a few sessions ago. Egyptian pound, where there's a rate cut incoming, 16.592. I think it will surprise by behaving very, very well. And the rand 15.3139. Euro dollar, this is a chart. I still think we're headed below 110, then 106, then maybe 103, and then parity. But this could take a long time to play out. It always feels as if it could happen quickly, but it doesn't. That's one thing about the euro. Commodity markets, gold, last trading at 1498 and change. It feels toppy to me, but you've got to sell it around 1540. But you know, this is that article I wrote about, you know, safe havens priced for Armageddon. Gold's long-term prospect is up, up and up, and the reason why I say that is money supply is up, up and up, says Mark Mobius. Crude oil, $56.15. Haven't got a clear view on it. I know it can't go above 80 on any news, I don't think. And I think on balance it should be headed lower. Iron ore, which of course had that incredible run after the Vale incident in Brazil, is now coming off. This is a chart from Sun Chartist. Emerging markets, month-to-date spot currency returns, Sun Chartist again. I wrote about this, saying emerging and frontier markets have been encountering a bout of serious turbulence. The rand, which can be viewed as a proxy for the global appetite for risk, is back as the world's most volatile currency. It had depreciated at that point 6.5% versus the dollar in August, the worst performance among emerging market currencies after Argentina's peso. And I was saying there's a big negative spillover happening in front of our eyes. John Authers, in that article I was saying read in full, dives into this. EM currencies close to a low set in September last year. Dollar, which strengthened as US stocks enjoyed a good day, will be where the stresses meet. JP Morgan's index of emerging market currencies hit a low last September amidst bad news from Argentina and Turkey, and speculation then that the Federal Reserve was locked into a long-term rate hiking cycle. And now we're here, and we're hitting those lows again. India rupee, this is a chart from Business, that softened up a little bit of late. And this took my attention from _SJ piece. This is the sky of the biggest city in the country of Brazil, Sao Paulo. The smoke of the burning Amazon rainforest has covered it entirely. Very interesting article in Business Week about Zimbabwe. Zimbabwe's rulers find themselves in a trap of their own making, are finding that 2 decades of economic mismanagement and brutal repression have led them into a trap from which there's little chance of escape. If they implement the political and democratic reforms needed to win the financial support the economy needs from international donors, they're likely to lose the next election. If they don't, their people, propelled by the extreme hardship brought about by austerity measures imposed by the IMF and World Bank, may remove them through an uprising. Already, a currency devaluation has slashed the value of wages by 90% in just 6 months. Continued brutal crackdowns will thus increase the risk of Zimbabwe reaching a tipping point, similar to movements in Sudan and Algeria, where sustained protests brought down entrenched regimes. Finance Minister Mthuli Q, we can declare victory on the fiscal front. Everything that I say, I implement. A basic refrigerator retails for the equivalent of about 7 months' gross salary for a civil servant. Few can afford to shop for such items. And Crude, a Cambridge-trained economics professor, says the situation is similar in neighbouring South Africa, where he once lived. That's untrue. In South Africa, an average monthly salary for a government worker is enough to buy 6 refrigerators. From 2010 to 2016, pay for the 400,000 government workers was raised to a level where it accounted for more than 90% of tax revenue. The country is saddled with $9 billion in external debt and unable to borrow more until its arrears to international creditors, such as the World Bank, are met. About a quarter of the population, about 14 million, once considered to be Africa's most educated, has emigrated. He introduced an unpopular tax on mobile money, reintroduced the Zimbabwe dollar in June, and boasts that the country has been running budget surpluses since January. On top of this, a drought has devastated agriculture, and the country will need to import 800,000 tons of corn, almost half its annual consumption. It's unclear how it will pay. Slumping hydropower output has led to daily power outages as long as 18 hours. People are very, very angry, says Japhet Moyo, Secretary General of the Zimbabwe Congress of Trade Unions, who forecast spontaneous riots similar to looting that occurred 20 years ago. It puzzles ordinary people. How do you have a surplus when government-run hospitals don't have medication? What is this man talking about? 29th of July, I said Zimbabwe is a laboratory experiment, with inflation last clocking 176%. And I said there is a straw and camel's back moment, but predicting that moment is always a fool's errand, but I think predict it we can. This photograph, of course, went viral around the world. The Zimbabwe police were here. Harare, August 16, 2019, AP. Muzwaki via Kobo 3. 21st of January, I said, what is clear to me is that Zimbabwe is at a tipping point moment. I also said there is a correlation between high inflation and revolutionary conditions, and Zimbabwe is a classic example. October 2018, when they blew $1.3 billion ahead of the election, I said, the government's voodoo economics, where it spent $1.3 billion pump priming the economy ahead of the election, money it did not have, was the straw that broke the camel's back. Zimbabwe is to issue cash notes soon to replace the country's quasi-currency that was introduced 3 years ago in a failed attempt to counter a crippling shortage of cash that's pushed inflation to the highest rate since 2008. The return to a fully fledged local currency exchangeable outside the country's borders will be backed by an undisclosed amount of foreign exchange reserves golden loans. I think we'll never know what that is, how much is backing it. Qatar is to build a new port in Hobyo, very strategic, aimed at shoring up Prime Minister Kerry. This is Rashid Abdi. Prime Minister on month-long reconciliation in Galmudug, Qatar financing integration of ASWJ. It's all part of 2020 game plan. Prime Minister Kerry will stand for President. Doha has marked him out for favour. 29th of July, I was saying there has been a significant advance and intrusion by middle powers, Saudi Arabia, UAE, Egypt, Qatar. Indian Ocean economy in a port race, I was saying, from Massawa, Eritrea, admittedly on the Red Sea to Djibouti, from Berbera to Mogadishu, from Lamu to Mombasa to Tanga, to Bagamoyo, to Dar es Salaam, Beira, Maputo, and all points in between, we're witnessing a port race of sorts as everyone seeks to get a piece of the Indian Ocean port action. The Gulf countries, who now appear to see the Horn of Africa as their hinterland, and Hobyo is in line with that. Then, a very interesting development, Deputy Prime Minister Abdulrahman delivered greetings to the President from the Emir of Qatar, because they're on opposing sides in some ways. Kenya-Ethiopian proxy war glares ugly face ahead of Jubaland elections. Heightened tension has emerged ahead of the Thursday regional elections as Kenya and Ethiopia seemingly involved in a push and pull over perceived vested interest in the polls. A civilian aviation source told Radio Dalsan that an Ethiopian plane was denied access to the Kismayo airport by Kenyan forces, creating tension between the two AMISOM troops contributing countries. Very interesting article in Global Witness. Denis Sassou-Nguesso, the President of the Republic of Congo, and his son Denis Christel Sassou-Nguesso. This photograph was from Jeune Afrique. Jose Veiga was the Portuguese businessman who is the target of a Portuguese investigation into deals in the Congo. It is alleged he acted as a frontman for Denis Christel Sassou-Nguesso. Sassou-Nguesso is, of course, one of the longest-serving rulers in the world. This is the scene in Malawi at activist Timothy Matambo's home, which was petrol-bombed on the 15th of August. Matambo is chair of the Human Rights Defenders Coalition. This TIPEX election has not bedded down. It's an unprecedented situation in the country, Matambo told The Guardian. South African all shares up 2.93% year-to-date, dollar rand at 15.30, but now finding 15 resistance. Egypt pound firm at 16.60, but there's a rate cut incoming. Let's watch it and see how it behaves. EGX30 up 10.68% year-to-date. Africa's largest oil producer has a record 9.6 trillion naira, $27 billion of government securities that have to be repaid by the end of December. And that's why it faces tremendous pressure. That's why the central bank governor was in London. But normally when that sort of thing happens, you know it's time to panic. Bloomberg has an interesting clip. African-focused Nigerian naira faces pressure. The Nigerian all shares down 13.91% year-to-date. As many as 2,700 jobs are at risk after Ghana's central bank shut down GN savings and loans as part of a regulatory cleaning up many more. Ghana's stock exchange is down 8.31% year-to-date. Here in Kenya, the Treasury has upped its domestic debt target to 300 billion, hinting at a possible shortfall in projected tax revenue. Kenya shilling 103.05. Nairobi all share, all about Safaricom, which has been very firm of late, up 7.63% year to date. NSE 20 down 11.74% year to date. And as MN Jug, my friend at Malindi, says, it's down to 2,552, a level last seen in March 2009, a decade ago. Thank you for stopping by.